So with these types of companies, so what we see a lot of times that most of these matrix, so the like I'm talking about selling. So like when you're in the selling phase, generally the numbers when they come, even though they are like stellar numbers, the stock start correcting even much before them, right? So
Absolutely,
then,
absolutely that happens, and that's where I'll bring in some slides. I will talk about this. See this. So when playing cyclicals, what do we have to comprehend? Within the stocks and sectors, you have to comprehend business cycle as well as market cycle. They may not coincide. Okay. So do make your adjustments accordingly. Best price may come before best results, and worst price may come before worst results. This we have observed over the years. So there is no exact science of selling in that sense. So I have talked about various ways of selling in this presentation, but I can show you it in the presentation, or I can talk about it. Uh, so there is no exact science. The problem we have is that all of us want to sell at the top. That is the problem we have as investors. Okay, and all of us want to buy at bottom. That is the biggest problem I have seen across people. Why? I mean, for me, if something has given, uh, 10x kind of returns, this thing, I'm fine leaving the last 2x. Okay, even if it doubles from what I've sold, it's fine because I've made 10x. That is more than enough for me. Uh, Also, you would look at, is that, for example, let's say I got in this stock I was talking about, we got out at 1200 to 1300. There could be, multiple reasons for getting out. One is you are uncomfortable with the valuations. You are not sure of, how much long the cycle will last. Okay. Or if there are better opportunity, there could be some opportunity where you think that your risk reward is better. So you exit for those reasons also. So that's why I say, you don't have to, basically try to get out at the top. So as I said, you don't have to get in at the bottom nor get out at the top. Everything boils down to risk reward ratio at any point in time. Okay. And other opportunities available at that point in time. So that's how we do our investing. We will always periodically assess the risk reward ratio, the margin of safety, and accordingly take calls. Other ways are, you get in, you can look at a few ways. If you want to make it a bit scientific, you can get in at certain price to book, get out at certain price to book. For example, bottom of the cycle, these companies will be available at 0.3 of book. And in top of the cycle, it can go to 1.4 to 2, for example. So you can structure from past cycles, you can get all the data. You can say that, okay, I will get out at 1.2. That would have still made me a 4-bagger, or I could. Or same thing happens with replacement cost. So you can have different strategies for yourself. You can have trading stop loss strategy.